Bitcoin ETF launched in January of 2024, and it has already outperformed more than 90% of all other ETF in the first quarter. And these ETF have had over $10 billion invested in them in less than 2 months, which is by far the most successful ETF launch ever. And during this time, Bitcoin has gone up 70% in the first quarter, and it's driven primarily by the availability of these Bitcoin ETF. And if you're curious if there's any more upside in the near term, well, there happen to be 2 major macro events happening in the next few months that may just catapult these ETF to even higher returns. And I'll make certain to share those at the end of the video. Now, the question that I'm asking myself is, why don't I have any of these ETF? And if that's a question that you're also thinking about, then this is the video for you. Or if you do own these ETF, then you may want to hear why I like only a few of them and why there's one of them that you couldn't even pay me to take on. First off, I need to state what this video is not about. I am not going to cover the viability or the inner workings of Bitcoin or blockchain. There are a lot of other videos out there that can cover that topic a lot better than I can. But what I do want to cover is the listing of all the available Bitcoin ETF. Next, I'll cover the performances of these ETF, and then I'll go into the top 3 indicators that I look for in choosing one of these ETF. Then I'll go over which ones I would and would not invest in. And next, why would someone choose to invest in these ETF versus investing directly with Bitcoin? Then I'll share with you why I am not going to invest in any of these ETF. And the answer may surprise some of you. And last, I want to cover the 2 major macro events that are happening in the next few months that may cause the Bitcoin prices to go even higher. Let's get started by giving some context. There are roughly 10 Bitcoin ETF available right now, and I'm certain that number is going to grow over time. And as a reminder, ETF are exchange-traded funds, which are typically a pool of stocks where the fund has its own ticker symbol. But in this case, it is solely meant to mimic the return on Bitcoin without the individual investor having to purchase Bitcoin on their own. Instead, the management company of the fund owns the Bitcoin either independently or via another exchange like Coinbase. And here's a listing of those ETF along with their ticker symbols. And as a reminder, I have a link to a spreadsheet down in the description with all of these so you can research these further on your own. As I commonly say, I did all the research, so you may as well have access to all of it. Now, when you look at each of these ETF, a question that I hope that you're asking is, why does the price of the ETF vary so much across each one? And the answer is because the price is based on this simple little equation, where the total number of shares times the price per share is the same as being equal to the price of Bitcoin times the number of Bitcoin owned in that fund. Here's a quick example of IBIT with a price at $37.80. Now let's use the math to back into the price. The Bitcoin price today, as I'm filming, is at $65,550, and IBIT owns 254,403 Bitcoins. And there happens to be 442 million shares that are outstanding. When you multiply the Bitcoin price by the number of Bitcoin owned, you get their total assets of the fund at $16.7 billion. Divide that by the number of outstanding shares, and you get $37.73, which is roughly about the same price of the ETF. So if you're wondering why each of these ETF has different prices, it's because they have different number of outstanding shares along with a different number of Bitcoin that they have in their holdings. Who knew that math was going to be a necessary part of understanding stock and ETF prices? But how about some simple math used in owning a business that earns 10% each month? That's where today's sponsor, Limits Express, comes into play. They work as business managers to create and manage an Amazon store for you, where they buy and sell national branded products. To boil it down, they pool investor funds together to buy hundreds of thousands of dollars worth of new branded products at a discount from a wholesaler and then sell them on Amazon. The more business clients they have, the better pricing they get on the product to make higher margins. They do all the work and you share in the profits together each month. I've personally taken the plunge with them as an investing business where it takes a couple of months to set up, buy, and then ship the product to Amazon. So I'm still just in the starting phase. But if you're interested in learning more, I'll have a link in the description for you to speak with Kyle, one of their co-founders, directly. You can also check out their website in the links below. Now I'll begin to review the performance of these ETF, and you'll notice that some of them have higher growth over others year to date, and that has to do with the supply and demand within the ETF. My guess is that all of these Bitcoin ETF are going to start to level out with one another, and they're going to truly index to the Bitcoin now that the initial surge of buying has occurred. Now, I'm not saying that there won't be differences, because I can't speculate how people are going to react among the funds, which may or may not cause spikes in demand. But overall, I wouldn't read too much into which one has the best return year to date, as I believe that within a few months they're going to all start to level out and be similar moving forward. When looking to purchase one of these ETF, the performance will be a little bit more of an even playing field, so it won't guide my decision too much. Which leads me to the next section of the top 3 indicators that I would look for in choosing a Bitcoin ETF. My first criteria, and the most obvious, would be the expense ratio. And the elephant in the room would be the Grayscale Bitcoin Trust with the symbol GBTC, with its wildly high expense ratio of 1.5%. Grayscale has been in the Bitcoin game for over 10 years, where its original trust was privately held, and they claim that they can charge a higher fee because of their experience. And personally, I think that's a bunch of bullshit. Shiitake mushrooms taste fantastic. You know what else is fantastic? Pressing that like button so my channel here on YouTube can continue to grow. And if you're interested, I would love it if you'd consider subscribing so you can be up to date with all my content. Now, in getting back to the Grayscale ETF, let's call a spade a spade. They're charging more money simply because of greed. Because this is an ETF of just one asset, Bitcoin. Experience doesn't really mean anything. It's more of a commodity ETF where the fees, in my opinion, should be next to nothing. From my point of view, I would try to pick an ETF with lower fees, and here's how each of them rank according to those fees. The next criteria that I would be looking for is the custody of the physical Bitcoin. Most all of these funds are using Coinbase to manage the purchase and the holding of the Bitcoin that are owned by the fund. I can only assume that the SEC scrutinized Coinbase a great deal before approving the spot Bitcoin ETFs. But just know that there is a little bit of risk knowing that the custodian of the Bitcoin is a third party. And there happens to be 2 outliers from the group within the funds from VanEck and the Fidelity Fund. The VanEck ETF is using Gemini as their custodian for their Bitcoin, and I personally see that as a little bit of a higher risk. They certainly aren't as large as Coinbase, and with them being a one-off, I definitely put them in a group of higher risk because of it. Now, with regards to Fidelity's ETF, they aren't using a custodian at all. Instead, they own and manage their own Bitcoin themselves. Once again, from my point of view, I put them at the top of the list for being more secure than the others with regards to the custodian of the Bitcoin. Now, my third criteria I'd use in selecting one of these is the average volume and the market cap. Together, those give you some sense of liquidity and the ability to sell the fund if you need to. If the volume is extremely low with a low market cap, like the Wisdom Tree ETF, then I'd be more hesitant to buy that fund. Now, according to this criteria, the iShares Bitcoin Trust is near the top, and the Grayscale ETF is right there too. But if you dive deeper, you'd see that the Grayscale ETF, the one with the wicked high expense ratio, has had a major outflow of funds in the past month or two. And there's been a major inflow to the iShares Bitcoin Trust. And I'm guessing that's because the iBit fund has a much more reasonable expense ratio, so people that may have owned the Grayscale ETF could now be jumping ship and going with the iBit with a much lower expense. So based on those 3 criteria, here's how I would rank these ETF in terms of which one I would choose to invest in. But I need to reiterate that this is my opinion in how I would rank them. You may look at it in a completely different light. And as you can see from my list, I rate the Grayscale ETF towards the bottom because of the fee being way too high. And I expect that more people are going to sell that fund with Grayscale and move to a much lower fee ETF, which would cause their price to then drop, because now there's more supply than there is demand. And the one that I'm least excited about is the VanEck ETF because their volume and their cap are extremely low, and I also don't like the fact that the custodian is Gemini. But as I said before, this is merely my opinion. Now, the next obvious question that a lot of people are going to ask is, why don't people just buy Bitcoin directly instead of using an ETF, where an ETF has expenses tied to it? And the answer is extremely simple. It's because most people have the majority of their money invested into their IRA or their 401k, and you can't buy Bitcoin directly within those accounts. For those accounts, the only real option is to buy the Bitcoin ETF. Now, I get that I did just say that a person can't buy Bitcoin directly within their IRA, and that's not entirely true. If you have a self-directed IRA like myself, then you are able to set up an account with an exchange that sells Bitcoin, and you are able to buy them directly. And I promise that I will be making a video on self-directed IRAs, hopefully in the next month or so. Now I want to go over why I will not be investing into any of these ETF. And you're probably thinking to yourself,
Brian, I just watched this video on which Bitcoin ETF to invest in, and now you're telling me you're not even going to invest in them? What gives?
the reason that I am not going to invest in any of these ETF is because I invested into Bitcoin roughly 7 years ago, and it has been a very wild ride of its ups and its downs. And I happen to have a rule for myself that I'm not willing to invest more than 5% of my portfolio into alternative investments. And yes, I classify Bitcoin as an alternative asset, at least for myself. Currently, my initial Bitcoin investment is well over the 5% rule of my portfolio. So for that reason, I'm not willing to invest anymore. Because at the end of the day, I'm okay if I lose 5% of my portfolio, but I'm not willing to take on any more risk than that. And that's my reason why I'm not going to invest in any of these ETF. Now, had I not owned that Bitcoin, yes, I would definitely be investing in one of these. Now, I want to shift gears a little bit, and I want to go over some of the potential good news that may boost our investment within Bitcoin even higher. There happens to be two very big events that are happening to Bitcoin and Bitcoin ETF over the next couple of months, and I hope that it causes the price to increase quite a bit more. The first event is that Bitcoin is halving in mid-April. So roughly every 4 years, the people mining Bitcoin will be rewarded with Bitcoin at half the rate as before. This process may seem a little bit odd, but it was designed intentionally because Bitcoin has a finite amount that will exist at only 21 million units. Historically, when halving events occurred, the price of Bitcoin happened to go up as the circulation of new units was decreasing. But that is purely speculative and there is no guarantee. Now, the next big item of news is that China looks to be approving a spot Bitcoin ETF of their own in the second quarter of 2024. Imagine another $5 to $10 billion being infused into the Bitcoin ecosystem. Similar to when the US passed their spot Bitcoin ETF, there was a major bump in price. But more importantly, when there's $10 to $20 billion worth of investment capital put into Bitcoin, it should create more stability in the price, and it should give it a little bit more credibility long term. Just a quick reminder that I do have a spreadsheet down in the description with all of these funds listed so you can research them on your own. I hope this video helped you to better understand your Bitcoin ETF options that are available and answer just a few of those questions that you may have had about these ETF. Thanks so much for watching.